So kind of looking at the topic of today's panel, embedded finance, this is a topic that's come up quite a bit, I think, over the last few years. Embedded finance has a lot of benefits both for consumers and for businesses. So on the consumer side, really looking at enabling a much smoother and better experience from a payments perspective, but also from an onboarding perspective, and also enabling access. So kind of finding consumers where they are and enabling them to access solutions that they might not otherwise be able to. For businesses, it means they don't need to spend time, resources, and engineering talents building solutions. They can offer a much better user experience, and in many cases, they're also able to offer much more value, and sometimes that comes in the form of an additional revenue stream. So today we have some awesome builders from across the continent that are working on embedded finance solutions, whether that's building blocks, kind of like Stitch, or additional value solutions that they're working from a B2B perspective. So we'll start, and maybe just start with a round of introductions. You guys can introduce your businesses. So we can start here with Jihan from Lami.
Hi everyone, my name is Jihan Abass. I'm the founder and CEO of Lami. Lami is an insurance and service platform and API. We digitize the whole value chain of insurance. So from pricing, underwriting, claims processing, all the platform and API that businesses are able to use to integrate and embed insurance services. So you're able to now bundle insurance products with goods and services that you might be selling as a company. Currently we are in Kenya, Uganda, Malawi, and Nigeria, and looking to launch here as well. It's great to be here.
Hi everyone, I'm Olufemi. I'm the founder of VeendHQ, and at VeendHQ we enable financial institutions embed credit into various ecosystems. Right, what that means is financial institutions can bring capital and then deploy it into places where people earn money, right? Because we've discovered that in order to reduce the risk of defaults, right, it's a better approach to integrate with ecosystem where people earn and be able to take repayment directly from the source of income of borrowers. So we operate in Nigeria. So far, we've disbursed around $20 million to borrowers. In Nigeria, we have our financial institutions, and we serve around 300,000 customers. Right, we launched last year, and it's exciting being here. Thank you.
Hey everybody, Alex Christian from DataMynt here. So DataMynt, we offer digital asset infrastructure for businesses, so specifically micro businesses through platforms. We enable them to accept payments on chain, pay out, provide wallet infrastructure, with the idea being that really we should be using cryptocurrency as actual currency, both locally and cross-border. Many reasons and efficiencies and security, frankly, to do that. We just launched recently in Ghana. We're also in Nigeria, Kenya, and looking forward to this.
Hakeem, you're just in time. Tell us a bit about yourself and your business. Welcome.
Sorry, yeah.
We're just introducing ourselves. You can just introduce yourself and your business.
I still did not get that. Oh, just an intro. Apologies. So on my way here, I saw Andrew jogging and I had to jog the time. Apologies. My name is Hakeem, Akiode. I work for Youverify. Basically what we do is help our businesses, particularly financial institutions, automate KYC, AML, and all of their compliance operations. Of course, automatically. So we take that burden off of them by providing a suite of comprehensive compliance products that solves all of this problem for them. And we use tech to make your life easier.
Awesome, thank you. So we'll start here with you, Jihan. I want to dig a bit into the problem that you're solving at Lami. So I know one of your goals is to raise the rates of insurance coverage, right, in the markets that you work on. So can you tell us a bit about how you leverage embedded finance to do that, and maybe give an example of what that looks like?
problems with the insurance space is really the fact that we have to try to contextualize the sale of insurance products. So you don't really, if people have to go out their way, start searching for insurance products, then of course the uptake is not as high. So what we try to do at Lami is look at how we are able to contextualize or white label these kinds of insurance products into existing goods and services that people might be purchasing. Like for example, we work a lot with lenders, so like buy now, pay later platforms. And one of the most interesting thing about that is that because they're financing assets, we're able to embed asset insurance. We're also able to embed credit default insurance, which now protects the lender. And then we're also able to provide credit life insurance, all as part of the loan that's being issued. And we've seen such a big uptake for these kinds of products because it protects both sides, and it's also very much contextualized as part of that sale process of getting a loan.
Maybe go into a bit detail of like how that looks from a customer's perspective.
So for customers, it's really great because actually, as soon as they get a loan, all these policies are issued automatically for them. So actually, they're able to have that level of protection without having to take any extra steps. So it's completely frictionless for them. You're taking the data from these platforms and you're automatically issuing these policies for them. And then at the same time, they're able to go back into the same place that they got the loan and file claims against whatever issue that they might have had with the asset that they were purchasing, for example.
Well, so you see this contributing to more people adopting insurance than they might have otherwise.
Yeah, and I think the great thing is that if you're able to provide such a seamless service and you're also able to ensure that people's claims journey is super simple and easy, it starts to build that trust, because that's one of the key problems with insurance is that people don't really trust the process. So this way you're able to actually make it super simple, so that people are able to actually build that trust and start believing in the insurance process.
Awesome. Great, and you mentioned lending companies, right? So I think we'll move over to you, Femi. So you work with a lot of lenders, so can you tell us a bit about the problem that VeendHQ is solving and how an embedded solution is able to resolve that?
All right. At VeendHQ, the biggest problem we try to solve is the problem of repayment collections, right? We realize that it's very easy to get, right? Anybody can give anybody money and go to collect that something, but the biggest problem is the collection part, right? Now we're looking at different data about the digital lending platform, right? Buy now, pay later platform, and we realize that default rates keep on climbing, even though the ease of accessing data, right? It's currently easier to do that. So what we're trying to do is take another approach, right? The approach is integrate with ecosystems where people earn money, right? Which means where economic activities take place. So we can then leverage that integration to take payments directly from the source of income. So usually before it even gets to the mobile money wallet or even the bank account, right? So the biggest problem we're solving is connections.
Awesome. And how does the way that your solution is embedded into other businesses, how does that help with that collections problem?
All right, good. Our approach for embedding credit, right, it helps with collection because first, right, we are taking a B2B to C approach, right, which means, first of all, a business within an ecosystem needs to, first of all, have access to credit, needs to be able to leverage the existing relationship with the financial institutions that exist on VeendHQ, right? Which means if a bank A can provide a particular financial product to a particular customer set, let's say in the education ecosystem, right, parents will pay school fees, for example, right? For that single use case, right, a bank can deploy capital for the sole purpose of providing funds to schools for capital projects, and also for that school to also be a player in determining who is eligible for credit and who is not, because the school has data about who pays school fees early, right? Now, going to a restaurant use case, right? A restaurant has use case of returning customers, how much they spend. A telco has data about the airtime particular consumer spends on their network, right? So a bank can deploy capital to the ecosystem based on the data they have, can then make that capital available, right, to the end users, right? And collection can also happen, right? Going back to the financial institutions in that approach.
Awesome, thank you. Hakeem, Hakeem, I'm going to jump to you. So when we talk about financial institutions, one of the key challenges that they have when onboarding customers is KYC, right? So can you tell us why KYC is such a challenge today, and how Youverify is helping to solve that?
So to answer this question effectively, I think I'm going to have to break down financial institutions into two parts. So you have the traditional banking, and then you have fintechs, coming up. So for traditional banks, they are much more compliance oriented. Basically they know the law and they know what problems they face if they flaunt it. So you have banks taking KYC related issues, compliance essentially more seriously. So they understand what they have to do. But if you look at fintechs, I have come to the conclusion, especially over the last 3 months, that perhaps the knowledge of compliance laws as regards the fintech space in different countries is very limited. I was at different events over the last 2 months. I met new founders who were starting new fintech companies, and I asked them what's KYC, and a lot of people think just taking data and storing it somewhere in the database is KYC. And I told them, in Nigeria, for example, for every KYC rule that you flaunt, you can pay between 20 to 200,000 naira per infraction, right? So it means if you have 100,000 users and you flaunt KYC rules for all of them, you can pay up to 200,000 naira per user, multiplied by 100,000 people. That's what you're looking at, right? Plus you could go to jail. In the US a couple of months ago, 2 Nigerian founders were actually sent to jail, and it's compliance related issues that they could have prevented if they've done proper KYC and AML checks, right? So one of the challenges I think for new fintechs is one, the information, right? A lot of people, it's essentially a battle between compliance and growth. And for most startups, we want to be agile, so everyone wants to grow. And we feel like we can put compliance in the backseat and come back to deal with it. Well, the government is getting smarter, and of course they want more money. So essentially they will wait for you, right? They wait for you to get bigger, they wait for you to have more money, and then they come after you. And if you're lucky, you might be going to jail, like our Nigerian brothers and sisters. So yes, information, right? And I would have to also say infrastructure. So there are different bottlenecks in different countries, for example. KYC rules might differ. I know in Ghana, for instance, there are much more stricter enforcement as regards KYC, right? But in a country like Nigeria, law enforcement agencies, are we on record? might not come after you immediately. So enforcement is not exactly an immediate thing, and this is also a bottleneck, right? Because it gets fintechs essentially more relaxed, as regards issues like this. But what we have tried to do over the years is to provide the technology that allows you to access seamlessly, and also gives you like real-time responses. Right, and also to build something that makes your onboarding much easier, right? So you don't have to build and then build another infrastructure for KYC. You can just integrate with what's already existing, and essentially it makes onboarding easier for customers, and it makes your life easier as a freelancer.
Definitely. And what impact do you see that having on accessibility and reach, right? So are these businesses then able to reach and onboard more customers that they weren't able to otherwise?
Okay. So regarding accessibility, it really is something that we're still working on as an industry in Africa, especially, right? So there are different KYC data sources, and depending on your needs as an institution, what you require might also differ. I'll give an example. So for fintechs that deals with financing and loan, for instance, you have to do address verification specifically. And we all know that we have an addressing problem in Africa. Even Google is struggling to really understand our address system on a daily basis, and there's a lot of updates. So in that regard, you have a lot of registered institutions shying away from address verification. In Nigeria, for example, I think there's just about 2 or 3 of us that actually do address verification. While there are lots of registered institutions, they shy away from it because it takes a lot of human and tech investments to really be able to provide such services, right? But I think that it's better now than it was 5 years ago, right? And as technology continues to improve, it will also continue to get better. What it really is important is for institutions to really understand their field, to understand what laws are applicable to them, and to intentionally go after the solutions that they require. And by all means, even if it's not a promise that a fraud will not happen, we cannot guarantee that, but we can guarantee that they can be on the right side of compliance. And if in any case there is a breach on the platform, they still will not run into trouble with regulators, right? Because they've done everything by the books, and they would have data to actually prove that they did, right? And this is essentially where we are, but it will get better over the years.
Awesome, thank you. So Alex, we're going to come to you. So if we're talking about these sort of financial building blocks at the beginning of the customer journey, right, in the onboarding space, that's also essential when it comes to payments. So your business DataMynt is helping businesses to be able to accept crypto payments, right? So can you tell us a little bit more about how DataMynt works and the problem that you're solving?
Yeah, certainly. So, excuse me. So we're solving the problem again for businesses to accept and to send payments where crypto has been adopted by the millions. So Ghana is a great example of that. Nigeria is a great example of that. A few of the problems that we solve for our business and seller customers, one is volatility. So along with, I guess, complex infrastructure. So the idea being that if you're a consumer, you can be a community member and evangelist for any number of projects that are on any blockchain that have any number of assets and amount of liquidity. Well, if that asset is able to be traded for Naira, CD, or USD, then it is, we validated it's worth something. You should be able to go in to your local store and buy a cup of coffee with whatever you walk in with. You shouldn't need us to swap or bridge or open a new wallet. And we basically, our gateway enables sellers to accept that as is. We settle in a stable coin and then also enable payout on like local rails. So imagine bank transfer in CD or mobile money in some countries. So yeah.
Awesome. And how do you see a product like yours increasing like adoption of crypto more generally, right? Because obviously it's kind of a chicken egg, right? You need people that are willing to pay in crypto, you need businesses that can accept those payments. So how are you working to, I guess, grow the demand on both sides of that market?
Yeah, that's a great question. So on the, I'd say on average, business owners and shopkeepers are non-crypto native. There's certainly an element of education there, but once they understand what we're kind of offering and providing, it's a no-brainer, frankly. We do have a token that we're launching to incentivize and reward payments at our seller locations, so driving crypto consumers. But like you mentioned, we're just kind of following the great work that Yellow Card, Binance, and other amazing exchanges has done over the last 5 to 10 years in terms of consumer adoption. Where we're picking up the pail, so to speak, is again being able to buy to pay for things, for goods and services. So yeah.
Do you see that education sort of happening? I feel like there's a bit of a distance between, okay, I'm purchasing crypto to invest in, right, on a platform like Yellow Card or Binance, to where I'm actually going to use this now to pay for things in real life. How do you see that gap being bridged? Is there a lot of education happening there?
It's a good question. So, I think some of our kind of secret sauce that we borrowed from other merchant service providers like card networks and mobile money are activation materials in person like a few step checklist on how to, you're basically just sending crypto to another wallet. And then we do, demos, tutorials, and around the clock support for our merchant partners. And we have folks, resellers and ambassadors on the ground as our kind of first level of support as well. So, yeah, I mean, from a consumer standpoint, if you're familiar somewhat with crypto and how to buy and then just send, you're already there. So we try to simplify it as much as possible. There is certainly trade-offs between needing overly educating from a technology standpoint and having that right level of comfort and security to be able to accept this new form of payment.
Thank you. We're going to stay on the topic of payments. So Jihan, coming back to you, I think one of the challenges, of course, with insurance is the ability for people to make regular payments, right, toward their premiums. How is a solution like Lami enabling those recurring payments to happen more easily?
Yeah, so actually one of the biggest requests that we were getting was, options to pay in installments. So a lot of businesses or even individuals who are purchasing products through us wanted to be able to pay over, whether it's daily, weekly, monthly. So for us, it becomes a lot easier to offer such, broken down payment options. And for us, how we normally do it is that basically when we sell different kinds of products, we would just ask what kind of payment plan you'd like, and then from there we're able to actually just, request for those payments every month. A lot of the time, what's difficult for us to do, that we've noticed, is that doing direct debit payments, which isn't always available in all the markets that we are. However, a lot of the time, if you prompt these customers to pay, which we can do automatically, they're able to just make those payments whenever suits them. For businesses, some of the products that we do sell for B2B are very large policies, so they can be hundreds of thousands of dollars even in some cases. So there we see actually a big opportunity to be able to help these companies also finance some of the premiums that they're paying.
Awesome. And how do you see that differing between markets? Because I'm just thinking too, I know you're in multiple markets, so solutions like Stitch, these financial infrastructure solutions, or like HQ, et cetera, exist to make it easier for businesses to be able to accept payments on top of the rails that exist. So how do you see that differing between markets, especially when it comes to consumer preferences?
I think it really just depends on the mode of payment. So for example, in Kenya, the majority of people who buy policies from us would pay via mobile money, and of course when you use M-Pesa, right now they don't have direct debit options. So in other markets where people are paying by card or various kinds of options, they of course can set these up, which makes it a lot easier. So it really just depends on what mode of payment people are using and how advanced they are in terms of offering these kinds of services. But I do think that a lot of the time what we see is that people, it's not that people cannot afford insurance products, they just can't afford to pay for it up front. So if you're able to actually give them those options to break down the payments, it actually increases the likelihood of them purchasing these insurance products because of the convenience.
Thank you. And Kemi, I'd like to come to you. So thinking about the question of accessibility as well. So how does a solution like yours enable more people to access the loans that they need, and what are some of the core use cases that you're seeing?
The enable more access rights is majorly now. First of all, the channel is very, very important. Different regions need a different mode of accessing credit and also different ways of making payments. Right? So for example, in Nigeria, there's a particular credit product that really does well, really grows really fast via the USSD channel. Right? Now you have some that has to be deployed via a card, you have some that have to be deployed via a mobile app or a web app or via the agent banking network. Right? So the channel really determines how it's going to gets to the end users and how it's going to scale. So for me, right, the channel, it's always the number one priority. Now, the products itself now also determine how easily that particular credit product or payment product will be adopted. Right? So for example, the current products, right, in that different banks offer or different payment companies sometimes, it's rigid, right? It's a set interest rate, it's a set tenor, it's a set and of principle, right? Now with our approach of connecting to multiple ecosystems, what happens is for each of those ecosystems, right, so places where people earn, right, the credit policy deployed for those ecosystems now has a different type of product, right, for each ecosystem. So for example, for the logistic ecosystem, right, you have to ensure that it works for that ecosystem. If the rider needs money for fuel, it has to be a micro loan that is probably a daily interest rate. If it's a if it's an agent banking loan, you need to ensure that maybe it's from a tenor of 1 day or 3 days. If it's an instant settlement loan, you need to ensure that, oh, it's a daily interest that still makes sense with the transaction processing fee that the payment processor, the payment gateway charges at the end of the day. So those two things really determine adoption and scale, right? So the channel and the product.
Awesome, thank you. Hakeem, I had a question for you. So I saw that you launched a marketplace that leverages like the data that you've been able to capture through your KYC business. Can you talk to us a little bit about how that works? And do you see a situation in which people might be able to access like multiple different products without having to KYC again?
Okay, to provide a little background first. We noticed that lots of businesses struggle, right, with KYC. They also struggle to do it as frequently as possible. A lot of businesses do KYC just once when you're onboarding, financial institutions mostly. But if you verify a customer's address right now and you're providing a loan, 6 months later the customer might move. But you don't re-verify the address, right? And that's something that a lot of institutions have not prioritized over the years, which means although you did it at first, but you're still at risk. So one of the things that we try to do as a company is we try to create a solution that allows people self-KYC. So we have a product called UID. It's a digital wallet for individuals to save up all of their government-issued and personal data. Say, as a Nigerian, for instance, I can put my NIN, my BVN, international passport, driver's license. I can upload all of these details and just really save it there. What that helps me do as an individual is it helps me lock up all of my other documents, right, and really keep them safe, safe from wear and tear, safe from, perhaps an unintended robbery, and I have to lose my cards. And then I keep a digital version of all of those on my phone. So we don't access those data directly, right? We don't save them in the cloud, it's saved on the phone. So, we fulfill all the compliance requirements on our end. Now, what this does for companies is you now have people who are already self-KYCing. Because as they upload those details, before it stays, we verify them at our own cost. And so we have all those data. Now, as a company, to onboard new customers, they don't have to go through the process of filling all of their details all over again. You know what sign in with Google is? Sign in with Google. Everyone is, aware of signing with Google, right? It's just one tap, and Google automatically supplies, the details. That's exactly what we've built, right? One tap, sign in with UID on the part of the user. One tap sign in, and it automatically provides all the already verified information and data, an address that we have already verified to the business, right? And so if KYC and onboarding takes, say, approximately 10 minutes, right? Because we've already done that verification for you, it takes like 2 seconds, and you're all done. So this is something that we've built, and we're of course still improving upon, because quite honestly, when we did build it, it's as though it was ahead of its time, right? So we continue to improve upon it, for businesses of today and of course businesses of the future, such that we make KYC like really easy. It's one tap, and then it's reusable data, right?
An individual, for instance, can use the same data to access products from 20, 30, as many companies as possible. As long as those companies are connected to us, we can always provide them this information. Another thing that we also do is because we are directly responsible for verifying those data, we verify them as frequently as possible, right? So first day one, 6 months after, a year after, we continue to verify. So at every point where a customer gets data from us, they can be certain that they're getting the verified data, of a very, very short period of time. So there's no case for old, archaic information, on that platform. And although this is not something that a lot of businesses are requesting for yet, but this is something they are growing to realize. And a lot of businesses, especially those with big volume, now require solutions like this because, really managing a compliance department and having a section of that really focused on KYC costs a whole lot, right? And so by doing this, we're helping them really start tapping into their future from now.
Awesome, thank you. I want to make sure we have time to take a question or two from the audience, but I wanted to ask some of you, maybe we'll start with you, Alex. These embedded solutions, especially these financial building blocks, they're making it easier for businesses to get off the ground and to focus on their core solutions, right, while providing a better experience for users. So as you mentioned, you're cutting down, Hakeem, the time it takes to onboard from 10 seconds to 2 seconds, et cetera. And then in Lami's case, enabling businesses to provide services that they wouldn't otherwise, and therefore enabling those users of those businesses to access things like insurance for the first time. Where do you guys see the future of embedded finance, and what do you see that meaning for the fintech industry in general on the continent? And Alex, we'll start with you.
Yeah, I think as exemplified by all the kind of diverse offerings here, I think just adding to more and more, I guess you might say, outsourcing or building on to support financial operations. So taxes, accounting, compliance, payments in our security. And so I think that the more efficient and seamless you can offer added services, the easier it is to embed into businesses of all types, micro through the largest platforms in the world.
Cool. You guys want to answer as well?
Yeah, sure. I think we're going to see a huge growth. I think we've seen the same happening in the US and Europe as well already. I think just the convenience that embedded finance offers to the user in terms of just making the experience very seamless and easy for them, I think that's going to be the biggest driver. And I think also for businesses, the fact that it's not only providing this ease for their customers, but also providing an additional revenue stream, I think that's going to drive it even further. So I would say that it's just getting started.
Awesome.
All right. So I think with embedded finance, right, it's going to drive a lot of growth in terms of trade and also improve lifestyle, right? A lot. Now I see a feature whereby consumers no longer have to think about the money they have in the bank, right? All they need to know is, they had value somewhere, and then they are eligible, right, for access to finance, right, at the frequent touch points they go to. Now, the interesting thing I see, which I predict, is something I call shared eligibility, where a parent can then share the existing loan eligibility and also identity with wife, children, right, and other people within their network, right? Think about social media accounts and connections, right? Now, simply because there's somebody credible within that particular network, you can also write based on that trust, right, to then build some kind of credit product around that, right? So that's a feature I see with embedded finance.
Thanks. Hakeem?
Okay, so the financial sector is going to continue to grow. The rate's unprecedented. We've witnessed a lot of disruption in the last couple of years. It's going to continue to grow like that. And the truth is, the risks associated with it will also continue to grow. The money don't sleep, so certain people don't rest. They're always looking for loopholes. people are going to pretend to be customers just to try and identify loopholes in your system and exploit it. So there's a need for us as a RegTech institution to continue to also evolve to build products. One thing that fintech institutions really need to take seriously moving forward is transaction monitoring. And what that really does is it helps you monitor transaction pattern of individual customers so that you can identify irregularities in that pattern, right? And that way you can stop fraud, perhaps before it happens. So we're going to see a lot of improved products, and innovations coming up in that sector. And personally, I'm really excited about the future of finance in Africa as a whole, and I hope we're all here for it.
Thank you. Do we have time for one? Okay, 2 questions. Any questions from the audience? All right. Cool.
All right, in that case, round of applause for the panel. Thea, thank you.